Hello traders, today I want to talk to you about an indicator that is absolutely awesome, and guess what it's called? An awesome oscillator. Through this video I'll show you how the indicator is constructed, what are the different ways it can be interpreted to make trading strategies, and finally how we can use the scanner to combine it with other indicators to make robust strategies. So let's get started. The awesome oscillator was developed by Bill Williams, who was a visionary trader who combined psychology with technical analysis to come up with what is known as chaos theory. The awesome oscillator was one of the dimensions of the market structure defined by him in his book Trading Chaos. The awesome oscillator is an indicator used to measure market momentum. AO calculates the difference of a 34 period and 5 period simple moving averages. The only difference is the simple moving averages that are used are not calculated using closing price, but rather each bar's midpoints. The fact that it's based off of the average of high and low makes it stronger in markets that have more regular movements and more regular candle wicks. But if you're trading in a market where candle size varies a lot, then the awesome oscillator may not be the best for these markets because it's going to slightly skew those moving averages. So if you see this image, the awesome oscillator is designed to have values that fluctuate above and below a zero line. The generated values are plotted as a histogram of red and green bars. A bar is green when its value is higher than the previous bar, and a red bar indicates that a bar is lower than the previous bar. When AO's values are above the zero line, this indicates that the short-term period is trending higher than the long-term period. When AO's values are below the zero line, the short-term period is trending lower than the longer-term period. This image I've plotted the 5 and 34 median moving averages, and you can see how the crossover points coincide with the zero crossover on the awesome oscillator. The awesome oscillator isn't bounded by two values, and it doesn't have to stay between 0 and 100, since it is the difference between two moving averages. And just the difference of them can really go as high as it needs to or as low as it needs to based off of that 0 point. Now there are 4 well-known strategies associated with the awesome oscillator. They are zero line crossovers, twin peaks, saucers, and divergences. We have already seen the zero line crossover strategy above. Let's take a look at the twin peak setup. This is a basic strategy which looks for a double bottom in the awesome oscillator. For a bullish twin peak, the awesome oscillator is below zero. There are 2 swing lows of the awesome oscillator, and the second low is higher than the first, and the histogram after the second low turns green. The ideal method is to trade with a strict stop loss below the previous swing low. For bearish twin peaks, the awesome oscillator is above zero. There are 2 swing highs of the awesome oscillator, and the second high is lower than the first. And the histogram after the second peak is red. As you can see on this chart, there was a first sell signal generated, which we got stopped out of, and then the second signal produced good profits. One can slightly modify this by waiting up to the third reversal bar to place the trade to await a confirmation. Now coming to the saucer strategy. The saucer strategy received its name because it resembles that of a saucer. The setup consists of 3 histograms for both long and short entries. The concept is that of a 3 candlestick reversal pattern that continues in the direction of the primary trend. For a long setup, the awesome oscillator is above zero. There are 2 consecutive red histograms. The second red histogram is shorter than the first, and then the third histogram turns green. The trader buys the 4th candlestick on the open. For a short setup, the awesome oscillator is below zero. There are 2 consecutive green histograms. The second green histogram is shorter than the first, and the third histogram is red. And the trader shorts the 4th candlestick on the open. With saucer trades, look to keep a stop loss below the swing low for long trades and above the swing high for short trades, and look to exit the trade with a 2:1 or 3:1 profit to risk ratio. These are momentum trades and you're looking to enter and exit them quickly. Divergences. As with most momentum indicators, divergence between the price and the momentum can also be a useful clue as to what's going on in the market. For example, if you see the price making new highs but the AO indicator fails to make new highs, this is a bearish divergence. Similarly, if the price sets new lows and the AO fails to follow suit, this is a bullish divergence. Now let's go ahead and run the scanner and see how we can use the AO oscillator to find effective trades. I open the scanner, all scans, technical scans, and near the bottom of the list we have the awesome oscillator scans. We have two scans on our list here for AO crossing above the zero line and AO crossing below the zero line. I run the scan and see the results page. I want to filter the results to Nifty future stocks only. So let me do that. Then I take out the Nifty 500 results. My current time frame is 15 minutes. I can also scan for different time frames. I tried the daily LTP and I have Jubilant Food there as well. Going back to the 15-minute results, I open the Glenmark chart. I've also plotted the RSI as I'm looking for a confirmation signal on a second indicator, as I don't want to solely depend on just one indicator to make my decisions. I generally look for RSI to be above 50 for my long trades and below 50 for my short trades. I switch to the 15-minute chart. I don't see any clear pattern developing on the chart and the price, and AO seems to be whipsawing. So I want to give the stock a pass for the time being. Let's see Jubilant Food next. The stock is in a downtrend on its daily chart, which seems to be reversing. The RSI also moving over 50 signals that as well. One can consider taking a long trade in the stock with a stop loss below 1151, below its recent swing low. Now you can run the AO bearish scan as well and see the results and analyze them with the indicator plotted on the chart. I also have my RSI plotted to confirm the trend with values below 50. You can also shortlist your results to a watch list and further watch them for one of the strategies like Saucer or Twin Peak to set up and emerge and take those trades as well. So thank you for tuning in. Have a great weekend and happy trading. See you next week.